Our top story, UPS. They beat on earnings estimates in the third quarter. Revenue came up slightly short of expectations. Stronger demand for next day air shipping boosted results for the company. Shares, however, right now are trading down. They're off their lows of where they had been this morning, but they are still trading down. And joining us now to discuss this is UPS CEO David Abney. And what we're trying to understand, and first, thank you for being here.
Glad to be here.
Why Wall Street might be punishing you when you had what appears to be a good earnings report. I mean, your next day volume jumped nearly 24%. Total volume grew more than 9% domestically. And it was this announcement that Jim Barber, the COO, is going to retire that seemed to have caught people by surprise. Is it just that, or are there headwinds that you're facing that might be causing investors to beat you up a little bit right now?
Well, you're right, Adam. We did have a good quarter, and especially in our U.S. domestic operations. We actually lowered unit cost by 2.5% from a year ago to today. So very strong positive operating leverage. We grew our profits by over 26%. So I think it was a very solid quarter, and we expect to have a good finish for the year. I think there are macroeconomic concerns, and yes, we would like to see industrial production be stronger. We'd like to see some of these trade issues be resolved. I do think there's some rays of light between the U.S. and China, and then with Brexit, with the fact that Ireland and the U.K. have reached some agreement on some issues. So I do think that there's concerns there, but we also see opportunities because we believe our network is flexible enough to where it can adjust to whatever the macroeconomic issues are out there. Jim Barber, by the way, good friend of mine, 35 years with this company. Started at the lowest levels like I did and has worked his way up, has done an excellent job for us. But after 35 years, there's a natural progression. And we have a deep bench of people, and while we will miss Jim, we certainly will. We've got a solid group of people that will continue to run this business. So really excited about the potential. Have a great team.
I want to get more into the macroeconomic headwinds in a moment, but I do want to dig a little bit more into Jim's departure and what comes next. Because as Adam said, perhaps the issue is not so much him stepping aside, it's the surprise of it, that the street was not prepared for that. Many had seen him as a potential successor at some point. So now what do you do around managing the message about the succession? And do you have an active succession plan at this point?
Yeah, we absolutely do. In fact, I've been in this job for 5 years, and we started working on a succession plan from the very beginning. You just never know. And but I don't think people that understand UPS and know our model would be too surprised. I mean, you know, if somebody's going to retire, they don't normally give a whole lot of advance notice, right, that they're thinking about it. So to us, it wasn't a surprise. It was more of a natural progression. But this is a large company, and it's built on a lot of people, and we have strong leadership throughout. So succession plan is alive and well at UPS.
On the earnings call, I heard you say that you're getting more done with less, and it was in response to a question about what seems to be a cut in CapEx. This year and next year, it'll be about $1 billion. And that would suggest or correct investors who are worried about that you're preparing for headwinds because of the macroeconomic issues that we're confronting, whether it's Asia or even the EU. I mean, we were expecting retaliation from the EU with tariffs.
It is really just the fact that with the transformation projects that we have initiated, we are getting more done with less. So our projects are more effective, and we're able to bring them in at a cost that's less than what we expected. So we are excited. We didn't eliminate any projects. It's just more effectiveness in implementing. So we are excited we can bring CapEx down, be more efficient. And if there is an economic downturn, which we're not predicting, but if there is, we will be glad that we were able to make those adjustments. But this is just much more about, as each project gets implemented, we're doing it just a little better each time.
I want to pick back up on the trade war as well and how that's affecting the macroeconomic environment. You said you're feeling a little bit more optimistic, that it looks like a little bit of progress has been made. But every time progress seems to be made, we see it get pulled back. So what do you think are the realistic prospects that a deal will get done before the end of the year, say, or if not before the end of the year, when is it going to get done?
Right. Yeah, it is hard to put a timetable on. There's no doubt about it. And you're right, we can feel like we're taking 2 steps forward and then take a step back. But the last dialogue between the 2 countries was constructive. And we've seen some feedback over the last week that has built upon that.
But how do you plan as a CEO with this happening? Do you do some of what Adam was saying and some of what you were saying, which is to sort of pull back on investing a little bit? Is it also a reflection of that?
I'll give you a good example, real time, of what we've done. So we've acquired and we're bringing in brand new 747-8 aircraft. It's the largest freighter aircraft that's made. And they were originally designed to move from China to the U.S. and trade. Now the trade is reduced in that area. We just implemented one, but we changed it from China to Europe and back versus the U.S. So those are the kinds of trade-offs that we will make, and our network is so flexible that we can do those things.
And when we talk about international, you were able to grow the margins in the international sector, but I am curious. Let's talk about some of the happy stuff with the holiday season here.
That's right.
And then I got to throw Amazon into this.
Okay.
But first, you got the 9 new aircraft. You've added capacity to be able to handle 400,000 more pieces every hour. And that's automatically, that's going to be through non-human beings, even though you're hiring 100,000 people. 32 million packages per day. This is going to be peak 2019, up 5%. This all looks really good for UPS. But in the background, you got Amazon, which is moving in on your territory. Help us understand, is that a threat? And what percentage of that 32 million might be coming from Amazon, but next year will be diminishing?
Right. E-commerce is a very important part of our future. And so we are leaning into e-commerce. And that's the entire ecosystem. So it includes Amazon, but it includes other large and mid-sized retailers and e-tailers. And then it also includes the smallest companies that we are focused on at the same time. So Amazon is a customer of ours. We have a mutually beneficial relationship. We also see them as somewhat of a competitor. So we watch them just like we would anyone else. And so in that regard, you have to remember the market is growing so fast. And so it's not a zero-sum game, and it's really an opportunity. As long as it makes sense for us to do business with Amazon and vice versa, then that is exactly what we will do. But just remember that e-commerce is a lot more than Amazon. And a lot of our initiatives are focused on enabling small and mid-sized companies to compete with those large e-tailers.
We actually talked about that last time you were here. Yeah. We're going to see that, aren't we? And when we're talking with you next year, looking back at fourth quarter, we're going to see the initiatives that you're doing, cross-border e-commerce, 7-day delivery in the United States, and of course drones. I mean, you're partnering with CVS, potentially, it's not going to happen immediately. There are 12,000 access points for UPS customers through CVS. That potentially is going to go forward. And you're the only company that's generating revenue right now from drone delivery. So look ahead for me. We're talking to you in January or February of 2020, looking at the fourth quarter. What's the headline going to be?
You have certainly done your research. There is no doubt about it. So I am quite impressed. Drones and our Flight Forward initiative is really a big step for us in embracing technology and in charging forward to the future. So we are the only one that's doing commercial deliveries with drones. There's a lot of talk about projects and demonstrations, but we're the only ones that have the Part 135 certification. And we are partnering not only with CVS, but with AmerisourceBergen and with Kaiser Permanente. So 3 big multinationals, and that will be a much more important part of our business. So the other thing that you can see next year will be that a lot of our initiatives to reach these small and mid-sized businesses, our digital access program, is where we just added a relationship with Shopify, or expanded that relationship and added with stamps.com. That's going to bring 1.5 million small and mid-sized businesses to the UPS logistics network. So real excited about that. So the future will be the increasing role of SMBs, and cross-border trade is here to stay.
All right, David Abney, investors listening to you right now might see a bargain if they want to dive into this stock, especially with the things that are coming down the pike. It's always good to have you here.
Thank you.
Thanks, David.
Appreciate it.